We are in the middle of a COVID-19 pandemic. This has pretty much put the world into a standstill. Here in South Africa, the borders have been closed for any international flight. So no international flights are moving. Nobody can get out, nobody can get in. At the same time, you have Donald Trump busy arguing and fighting with China that China needs to take the blame for the spread of COVID-19. On top of that, Donald Trump is looking for Jerome Powell to stimulate the market by assisting and reducing interest rates and making interest rates negative. So it's a whole lot of things happening. And maybe this information is going above your head because you don't know what I'm talking about. So in this session, I'm going to be teaching you how you can make a profit from good news and bad news. If you've never traded before, this is an excellent place to start because I too was once just like you. Literally, I was getting up every single morning doing the same thing over and over again. I was going to work, coming back. My journey begins in the city of Cape Town. I had my first job and I was super excited. And I think my whole outlook about this employment thing and job thing switches when I actually got my first salary. I was exposed to taxes. I was exposed to unemployment fund. I was exposed to so many things that I didn't know. In fact, I was dead sure that at my first job, I was going to buy myself an Aston Martin. That was funny. Look back today and I think actually it's because of my understanding is that I didn't have the correct understanding about how money actually works and how actually you don't need to actually always just go to a job to actually make money, that there were other things around you that you could actually do that could actually create money for you. Now, imagine this. I'm waking up every morning, I'm putting my tie on and I'm going for my first meeting. I'm in there, I'm not really concentrating because listen, I'm not here. My mind just cannot stop thinking about how I can start making money. And maybe you've been there too. Also, similar to the time when I was sitting in the shower and I'm thinking, man, is my life built to just wake up, go to work and just pay bills and die? No ways. I went to school and I studied all these things and I find myself at a point where I'm not making enough money and I'm not reaching the goals that I want to reach. Man, how is it that I'm going to be able to drive a Lamborghini? How is it that I'm going to drive the car of my dreams? And how am I going to get there? If we were to raise our hands right now, how many of you watching this would like, even 2020 to be the year where they actually change their lives? Even if now that you have the chance and you're at home, how can you use this time to actually make money and build a money machine for yourself or build a business for yourself that you can take through to 2021 after the pandemic? I will start by showing you the basics of Forex, how you can get started with Forex, and how you can actually build your own money machine from your own simple smartphone or your laptop. Now, this is simple. It actually starts with a concept called how to trade, literally how to trade Forex market. First step about understanding Forex is understanding that there's a whole lot of things happening around you, that people, politicians, they are talking about the world going forward, governments going forward. They're talking about how they can improve trade, how can improve the lives of people, technology, and all of these things are coming together and they are influencing the Forex market. And this is pretty much what moves the Forex market on a daily basis. So it's all these people's thoughts, people's ideas. Some people plug in tons and tons of money in the market to manipulate it, to make it move in certain ways that they want. So there's a whole host of things happening. Understanding how the Forex market begins by trying to not take in everything, but taking bits and pieces and forming your own personal opinion about it. So it all begins by you opening a trading account. So you open a trading account by finding what they call a broker. A broker is a person that's going to give you access to the market. And you are going to link onto their service so you can be able to trade the market. And that's why you need a broker. For example, if you are doing sports betting, then you will register an account with your sports bet account and they will give you access to that betting area. So it's exactly the same thing. So a broker is something similar to the person that's going to help you bet. It's the central place. Not only that, Your broker is someone that's going to be providing you with what they call leverage. So let's quickly do some mathematics. The rand currently is 18 rand. 18 rand to the dollar. If you were to invest 18,000 rands of your own personal money and put it into the Forex market, this will be exchanged for $1,000. If the rand price depreciates further and goes to 19 rand, then you would have made a profit of 1 rand, right? So on the $1,000 that you invested and you'd convert it back to 19, then that difference would be the profit. That's the amount of profit that you've made. Now, when you look at it on a one-for-one basis, you'll realize that actually making 1 rand off of 18,000 is not really that much money. You just made 1,000 rand profit. Now, how can you actually make more? And this is where we enter the world of leverage. Now, leverage is like a loan that you get from the broker. The broker will give you a loan and allow you to buy even more, maybe even buy 100,000 worth of dollars, 200,000 worth of, depending on the agreement that you have with the broker. And this is what they call leverage. This then allows that 1 rand to be a multiple of the leverage that you selected. And that way you can actually start making money from it. So let's actually do some mathematics. The current price of the rand is 18 rand to the dollar. That means $1 is equivalent to 18 rands. So if you were to invest, say for example, you had 18,000 rand, your 18,000 rand can now be invested and you would get $1,000. So this is just a simple exchange. You're just exchanging your rands for dollars through the broker. Now, if the price of the dollar to the rand depreciates by 1 rand, that means that it goes from 18 to 19, then your $1,000 will exchange back to 19,000 rand. So you would have made a profit of 1,000 rand from your investment. That's pretty much how Forex works. So the price of the dollar moved perhaps because Cyril Ramaphosa said something that the market did not like, and it further depreciated the rand. And that's how you actually make a profit. Now with leverage, you are allowed to then get a loan from your broker who gives you, say, for example, a multiple of the money that you've invested. And from that money, you can be able to buy more. But the only amount you can actually use, depending on the kind of broker that you selected, is only the amount that you actually invested. So you don't lose more than what you invested. So for example, if now the broker gave you 100,000 from your 18,000 investment, gave you 100,000 of American dollars, then a change of 1 rand will be multiplied by 100,000. So you would actually make even more. And that's how it's possible for a typical trader or a young trader to actually make profits of over 400, 500%, because you invest small amounts of money, you get some leverage, and you can get a multiple of it. So now that we've spoken about a broker, let's talk about which brokers you could actually choose from. There's multiple brokers that you can actually go to and use simply by just going online and typing broker in my country, Forex broker in my country. For one, I would recommend you use XM. You get them at xm.com and open an account from there and start trading the market. Once you've selected your broker, you're going to get exposed to a whole different types of available instruments. So what's an instrument? An instrument could be Forex, could be commodities, and could be even stocks. So what's the difference between the three? So Forex is simply an exchange of currencies. That is the US dollar to the rand, the US dollar to the euro, the pound to the dollar. All those are Forex currencies where they match the currencies together so you can get an exchange rate. So remember, Forex stands for foreign exchange. Now, commodities are gold, silver, coal, platinum, all of those different stuff that we mine out of the ground. Those are commodities. And then you've got stocks, which is maybe stuff that you might know. You've got Netflix stock, you've got Apple stocks, you've got Samsung stocks. You've got all those different types of shares that you trade. So a stock would be a share of a specific company. Maybe you want to trade commodities because you think that mining companies are not there. They closed down during the pandemic, and you think that the price is going to go up because supply is not there and demand might still be there. Or maybe, for example, you want to sell oil because you think, hey, Since aeroplanes and all planes and most machine manufacturing companies are down, perhaps the need for oil will be low, and that's why the price of oil is going to depreciate and you feel like you're going to be selling. And so now you're within the market. Now, how and what do I need to consider when I'm trading the market? How do I actually then make money? It's all about understanding sentiment, understanding how is the rest of the world feeling about current policies that are happening in the country, current leaders that we have. So it is almost like a trader is simply a judge of the decisions that are made by our political leaders. As a trader, you criticize leaders' policy decisions using the market. For example, as you may know, that we buy gold only when we feel uncertain and we sell gold when we're feeling more comfortable. So if we feel that a leader is not giving the right policies and providing a lot of uncertainty and we are not be able to understand what is happening in that country, then we will punish the leader by buying gold and selling their currency and making their currency weaker. And if we're happy with the decisions that the leaders are making, then we will then invest more in their country by buying more of the dollars if we're happy, or we buy more of the rands if we're happy with the decisions that are being made. The market is pretty much trying to encapsulate people's decisions and people's policy making, and it becomes price, and price starts moving up and down based on those opinions and decisions. So as a trader, you need to capture that sentiment. Sentiment is pretty much what other people are thinking. What are we thinking and what do we think is going to happen going forward? Think about it. At the beginning of the pandemic, the COVID-19 pandemic, we thought the whole continent is going to be wiped out. But the more the leaders make the correct decisions, the more WHO starts informing other countries on how to manage it, the better this pandemic has become, the better understanding that we've become, and the more we begin to reward leaders by investing in their currencies, or maybe not buying out of equities anymore, maybe start investing back into equity, stimulate the market so we can start trading, because we are believing the sentiment is positive, that a vaccine is going to come and the pandemic is becoming managed as the days progress. Let me just recap. Sentiment is almost like, what is everybody feeling about a certain leader, or what is everybody feeling about a certain currency? Okay, what do you think is happening in South Africa? And if it's that bad, what do you think the impact is going to be on the rand? If you're feeling that everything is negative, then we say that we have a negative sentiment on the rand. If you're feeling everything in the US is positive, then you have a positive sentiment in the US, right? And that information will be used to fuel the current prices and your decision on where you actually invest your money. So let's look at it like this. Sentiment is when Donald Trump is arguing with China and they cannot come into a conclusion. Sentiment would be, I don't think that this deal is going to come out right. I think these guys are going to part ways. That is a negative sentiment. A positive sentiment would say that, I think they're making the right moves and they're having the correct conversation and asking the right questions, which means that you have a positive sentiment. But that is not necessarily a signal that you should be buying. It's simply a sentiment. So to determine a signal, now this is where you need strategy and understanding. A signal will be something that tells you that this is the right time to buy or this is the right time to sell. And as a trader, your main objective, if anything, it's not to trade sentiment. It's not to, just try guess what's going to happen. Your main objective is to generate a profit. Your main objective is to buy low and sell high. So now that we've discussed sentiment, how do you get to a point where you can actually trade what they call a signal? So a signal is an idea that someone gives you and say, hey, I think the price of the rand is going to go up and these are my reasons. And I think we can start entering now. I think the rand is going to move from 16 to 19 rand because South Africa is going to have a lockdown. So that signal would be buy at 16 and get out at 19. That is pretty much what it says. It's just somebody giving you their thoughts and ideas and you taking the same position as they have. So let's take it something a little bit step back, something that can make it easier for you to understand how to apply news to make money. Think about somebody who sells alcohol in the black market. So let's say South Africa just has a lockdown, and before they make the announcement of the lockdown, the price of alcohol was pretty much as we know it. Today, if you try to buy alcohol on the black market, it's almost 3 times the price. So if you had bought alcohol before the lockdown and you sold after the lockdown, you would have made profit from a decision that a political leader had made. And this is how the market also operates. It's just that in the Forex market, in the commodities market and all of that, it is based on current events, and the impact of that is felt almost immediately, within seconds of it happening. If Donald Trump fires his vice president, then that information will filter through the market immediately, and the prices will respond immediately. So now, where can you actually get information from? Because pretty much if I'm trading the markets and I don't have any form of information, then where do I get this? So it's pretty simple. There's 2 websites that I personally use, which is forexfactory.com and investing.com. Now, I would recommend that if you're a beginner, you start with forexfactory.com, because the way they list their news is not so overwhelming compared to investing.com. Investing.com covers a whole massive range, news from Brazil, South Africa, emerging markets, and main grown markets, and better markets. So they cover a whole host of information and might be overwhelming if you've never traded before. Whereas Forex Factory focuses on major markets. So you're talking about the US, the euro, and the pound. That is what it mainly focuses on. So as a start, get into forexfactory.com and check it out. And if you're more adventurous and you'd want to get a little bit more information, then you use investing.com. All of those are really great news sources that are updated within the hour, within the minute, within the second. Now that you've set up your account, you know exactly where to fetch information. Now we need to get into the trader's psychology. This is where I might be different from other traders, because now here we're talking about strategy. How can you be able to buy low and sell high, and how can you generate a profit? There's really 2 main types of traders out there: guys who are technical traders and guys who are fundamental traders. Now, fundamental traders are people who focus specifically and only on the news, and technical traders are the guys that you see mostly on the TV that have got these little funny charts and graphs, and those are more technical traders. Personally, I sit in the middle. I believe that you need to know what's happening in the world, and you need to know what the technicals also say. So technicals will be telling you about trend lines, what you've been picking up in the past. You'll be looking at your candlesticks. You'll be looking at little pictures and graphs. Whereas fundamentals is just focuses on decisions made by political presidents and maybe the value of the inflation, maybe interest rates. They just focus specifically on that specific information and nothing else. So being in the middle allows you to get best of both worlds. And this is a personal preference for myself. See, I believe that you need to be in the center to see everything. So now let's talk about what my strategy is. I'm a day trader, which means that on a daily basis, I will open a trade, and by the end of the day, I will close it. So I'll enter maybe from 8 o'clock in the morning, and then just before 12 o'clock, I will close all my positions, win or lose, because I'm a day trader. In other words, that I only focus on events that are happening on the day and nothing else. And that's what generates a profit for me. You could be, for example, a more swing type of trader, which is a trader that will hold a position and hold it for an extended period of time, maybe a week, maybe 2 days, 3 days, maybe even a month, or even a year for some other traders. Or you could be some form of scalp trader, a person who just goes in and out. This is the typical ones that you see on Instagram, right? Like the ones that just show all these multiple things, and you see in and out, in and out, in and out. Those are the kind of scalp traders that just take small profits multiple times, and that allows you to take more profit, but you trade more frequently. Whereas if you're a day trader, you take the events that are happening in the day and you make profit from what happened in the day. Now that we've discovered that I'm in the center of fundamentals and technicals, how do I actually take all of this information and blend it into some form of money? How do I blend it together so that it can create an idea and a signal for me to be able to trade? How do I do that? Now, I'm contrarian. So the word contrarian means I'm happy when everybody is sad, and I'm sad when everybody's happy, right? So if everybody is doing maybe buying gold, I know I talk about gold a lot because it's my favorite commodity to trade. When everybody is buying gold, I am looking for signals to sell. And when I say signals to sell, I'm looking for patterns, I'm looking for information, I'm looking for a discussion by a political head that will substantiate my idea that gold is overbought or gold is oversold. This is pretty much what I look at. I focus on being contrarian because I always say that if everybody is doing exactly the same thing, then something is broken. I'll just give you a typical example. When you're looking at a Ponzi scheme, for example, and you want to play in a Ponzi scheme, you'll always find that the Ponzi scheme will crash when everybody's talking about it. Remember Bitcoin? Remember when Bitcoin and everybody started talking about Bitcoin? What actually ended up happening is the price of the Bitcoin went from 300,000 for a single coin to now down to 100,000. And that's because everybody was into it. Everybody was very euphoric about it and talking only about Bitcoin. And as a result, the price dropped. Why does it drop when everyone's talking about it? That's pretty much being contrarian. See, if you realize that everybody was talking about it, then you knew that something was wrong. Somebody was manipulating it. And as a result, it crashed. And you must always remember that in the Forex market, there is a whole host of manipulation and big players who will manipulate the market so that they can achieve what they want to do. Manipulation comes in the form of just plugging in a lot more money than it's supposed to in the market, which will cause prices to move up and down based on supply and demand. Let me give you another example. With the Bitcoin, at some point, the coin was 300,000. But the only time that I actually personally realized that Bitcoin is euphoric and that everybody's talking about it and doesn't understand it was when I was in an Uber. I literally got into an Uber and the Uber driver just looked at my phone and saw me looking at some time series chart, look at my charts. And then he was like, hey man, what do you think about Bitcoin? To my surprise, I'm like, this man looks like he's about his 60s. So I asked him, man, how old are you? If you don't mind me asking, he's saying, oh, I just retired, so I decided to be an Uber driver. What were you doing before you became an Uber driver? Oh, no, before Uber driver, I was another driver. I was a private driver. So I understand that this person that I'm talking to is actually not in the financial market. So this person is probably one of the last people to find out about cryptocurrencies. First, he's a little bit older, so understanding cryptocurrencies might be a bit difficult for him. And second of all, he is not exposed to financial markets to be knowing about cryptocurrencies. So as such, I knew that if information like that has reached an Uber driver, then there is something euphoric about it. There's too much information about this thing. Too many people are doing it. Too many people are trying to buy Bitcoin. And as a result, the price crashed. And this is what happens in a euphoric moment. Is typically what happens also in a Ponzi scheme. When everybody starts talking about it, that is the time to go out. That is when the warning signals come. So as a contrarian type of trader, that is the information I'm looking for. I'm looking for euphoria. I'm looking for too much excitement. I'm looking for a sheep of people doing exactly the same thing. And as a result, I will trade that feeling. So if I see that a lot of people are doing something, I will go against them. And if I find that too few people are doing something, I will go against them. Let's go back to history. There used to be a time of the gold rush where people were rushing to mine gold. They were buying all this equipment, rushing to dig up gold. But lo and behold, all the Rockefellers, the JD Rockefellers and them had taken up all the areas, had the best gold nuggets and everything. And everybody else that was coming in, trying to hit the big time, was actually only getting the remaining gold pieces. At the time that everybody was doing it, it was much harder to take out a single ounce of gold from the ground. So all those people actually lost all their life savings because they just did not get the gold pretty much. And they were just following the herd and sentiments. But one person known for jeans, Levi Strauss. You probably know Levi Strauss from the jeans that you wear. And Levi Strauss made a lot of money from the gold market because he realized that, hey, all of these people are rushing to dig gold. Why don't I just give them the clothes to go dig that gold with? So he created jeans, and these guys that are rushing bought the jeans, wore the jeans to go mine gold, which they never found. A contrarian trader is somebody that will look for opportunity where everybody else is focused elsewhere. That's a typical kind of character that you need to have to be contrarian, where you're going against the typical grain. So if everybody is trading a trend line, you are opposite. You are looking for something else. You are looking for the trend line failing. You're looking and you're saying that the trend line is at the end. What's actually fueling the idea on Bitcoins? So pretty much right now, you might say, hey, if you're contrarian and nobody's buying Bitcoin right now, surely it is a time to buy Bitcoins. And I say, maybe it's a good time to buy Bitcoins at the moment. But have you ever thought, what is the irrational idea that Bitcoin was built on? So the idea was that Bitcoin was built to replace fiat. So what fiat is, the normal currency that we use on a day-to-day, our own little dollar bills, rand bills, and normal coins, those are called fiat currencies. And cryptocurrency is based on this mathematical calculation in the background that has to do with mining, etc. That is the currency that was built for the digital world and that was designed to replace the fiat. But now it looks like, hey, that cryptocurrency can actually be manipulated. Now, remember, all this time, we had all thought that cryptocurrency cannot be manipulated. They have the secure system. You cannot print it. You cannot do all of these things. But it was manipulated, where the price was at 300,000 Rand for a single Bitcoin, and it dropped to 100,000. And that was as a result of manipulation. They also realized that it could be manipulated from speech. You guys remember when the CEO of JP Morgan, who made a comment about the Bitcoin and the price on that day dipped? That's when we also realized that, hey, it can actually be manipulated by public figures or manipulated by people who had more money than the rest in the general public. So, and that's why there are more and more worries about the future of cryptocurrency. Before we realized that it can be manipulated from speech and it can be manipulated by being what they call a big whale, before we realized those were happening, the liquidity providers that offer access to the market, which is, your brokers and what, we're offering it as part of their bundles. So remember, we spoke about instruments before, and we spoke about Forex, commodities. There was actually a section where it's called cryptocurrency, where you could actually also trade that, even using leverage. Now, some brokers don't offer this because, one, cryptocurrency volatility is massive. You could wake up in the morning and the price is down 25%. By the time you get to the kitchen to make your coffee, the price was up 200%. So that was cryptocurrency. And those liquidity providers moved out of it and stopped offering trading on Bitcoin because it's not so stable as we thought it would end up being. And as a result, now the outlook of Bitcoin is not so great. And I don't believe that the outlook is going to improve anytime soon. Bitcoin was the first cryptocurrency actually created. And that's the one that we now, so most people think when you talk about cryptocurrency, you're talking about just Bitcoin. No, we're talking about a collection of digital currencies. So you're talking about the Ripple, you're talking about Ethereum, you're talking about, I think there's a Dogman, I think there was even Potcoin. There's hundreds and thousands of other coins that have been created. Some of them delisted, some of them keep listing. It's a whole industry. So Bitcoin alone is not just the only cryptocurrency to trade. There's also others. I personally still hold Ethereum. But there's no informed opinion about it. It's only because I just don't want to miss it. Just don't want to miss it. And I thought maybe I should just try my luck on it. I remember when I first started trading, I thought, I could do this. I could just learn by just Googling, going on YouTube like this and just, checking it out, how to trade. And the sad part is that I got over 13 million results. That means there was 13 million pages of people who knew how to trade. Now that's funny. If there's 13 million pages of people knowing how to trade, why is it that 90% of traders lose? And the reason that is because people are following information that is not relevant to today. It's not applicable today. You're learning about trend lines where they're not necessarily applicable right now. So you're just pretty much following some old theory that might not be applicable right now. And as a result, you need to work with somebody who's trading right now, who understands the sentiment right now, what's working right now, and what strategies you can employ right now. And this is where now you get this whole world of also known as Forex Scammers and Forex mentors and all of this world. This is how now, you might get yourself working with a scammer, because now you need to use your own eye to figure out who's fake and who's real. In the trading community, there are traders who trade and there are traders who teach. So it is also believed that those who teach can't, and those who trade who can don't. The adage is not necessarily true. You see, many really good traders actually do offer training lessons and teach you how to be able to trade. It's just that sometimes your understanding of what this person is trying to teach might not come out as easy as you might think. So it's all about developing your own confidence about trading. And the fact is, you don't really need to be able to really trade and win 100% of your trades to actually make money. The statistic really is you only need to win 20% of your trades to actually make money. And that's something most people get their minds blown. So if you want to filter out who's a bad trader and who's a good trader, just ask them, how many trades does it take? What percentage of my trades do I need to win to make money? And if he tells you 90%, then he's wrong. You need only 20% of your trades to be right for you to make money. So now that you've selected your broker and you're now getting all of this information in, you might be sitting there wondering, hang on, so how does my broker actually make money in all of this? Because I'm taking a loan from him. I don't have to pay him an interest. And if I get my trade wrong, only amount I lose is what's in my bank account, what's in my trading account. So how does a broker actually make money? A broker makes money from the spread. That is the difference between the asking price and the selling price. So a broker will offer you the price that you can pay for a certain instrument, and then you can then pay for that. And the difference between what the current price is and the current price you were offered is called the spread. They make money from that difference. Let's think about it like this. A spread would be you buy a bottle of alcohol at 100 Rand and you sell it for 120. The other person would have paid a spread of 20 Rand to get access to that thing if they're going to be selling it further. So the difference between the asking price and the selling price, that is what they call the spread. And that's how the broker actually makes money. Now, the broker encourages you to take more leverage, because more leverage means you take up more positions, right? And use up a lot more money, and the spread is much higher. So if they're making a 50-cent spread on 100,000, that can amount to a hell of a lot of money. This section is very technical. And at this point, you should have decided that you want to go the route of becoming a contrarian trader like myself. So what mindset would I need, and how do I become a contrarian trader? Now, you might need to grab a pen and paper for this, because it's very easy for this type of information to really go above your head. Okay, so the first step is 1. As a contrarian trader, you are looking to be trading against the grain. So you don't follow what is actually happening in the market. For that matter, if 90% of those guys are losing anyway, why should you be trading with them? You should actually be trading against them. So if a guy says buy gold, you look to sell it. If someone says sell gold, you look to buy it, because you are contrarian and you go different from the grain. I want to give you an example. A few days ago, I traded gold and I entered at $1,705 an ounce. The current price is now at $1,750 an ounce. That means I made a $50 profit. Now, how did I get to that point? You see, the news kept telling us about that they are closer and closer to finding a vaccine. We are on our way to opening our borders. But the one thing that was worrying me was that the presidents and everybody was way too positive. There might be something that they're not telling us about. A few days later, we were then told that actually a vaccine could be taking more than a year to find. Now, this is a bit different from how they were telling us this information. Remember, the vaccine for COVID-19 was said to be on the way, but they did not say that on the way is in a year's time. I mean, just imagine if you had a boyfriend or girlfriend who said, I'm on the way, and landed there a year later. Are they really on their way? So that is pretty much in my mind what was happening. I realized that so long as the planes are not back and up flying, so long as they're not immediately opening the borders, then this vaccine is not as close as we think it is. And as a result, I bought gold because I was wary of that uncertainty that they were giving. They were not giving us clear dates. They're not giving us clear information. So I bought gold saying, I'm uncertain, I'm unhappy with the decisions these men took. Second of all, I noticed that there's a failing relationship between Donald Trump and Jerome Powell, which is the Fed president. Their relationship has been on and off, and Trump proceeds to tweet about how much he does not like the Fed president. Every time Powell is addressing the people or the media, Trump continues to troll him and starts tweeting about him on Twitter. And as a result, I noticed, hey man, there's a breaking relationship between these two institutions. And as a result, I'm going to buy gold. And in fact, my trade was right. And I went and the gold went from 1,700 an ounce, 1,705 an ounce to 1,750. And that is an example of application of being contrarian, where you know that the media is saying something positive, and then you just completely go against it and decide that you don't believe it and go completely contrarian. So we've discussed a whole lot of things right now. And in summary, we have pretty much covered how to open an account, with who to open it with. We've discussed leverage. We've also discussed available brokers, where to find sentiment, where to get the news. We've also discussed what is a contrarian trader. We've also discussed different types of traders that are available. We spoke about being a swing trader, a day trader, and being a scalp trader. So all of this information has now been bundled together. And now we need to take all of this information and start forming part two. Part two of where to go from here. Now that you know the basics, now that you know that I need to be contrarian if you're following a contrarian approach, now that you are now geared up and want to go on Google to start opening your trading account, I want you to take all of this information together, write it down on a piece of paper, and have a bit of direction on what you want to do next, how much you would look to invest in your trading account, and how much you should invest. And then in the next session, I will be giving you some form of guidance on how much is a great start of a trading account. What is a reasonable start? If you should start with R1 million, just kidding. If you should start with $5, also just kidding. I'm going to be covering in the next session how much is required to start a trading account and how you can actually manage it. I'm going to be also discussing maybe in greater detail how to manage that account, your risk in that account, and which trades perhaps you can start with implementing the current strategies that I'm going to provide you with.